Bitcoin just collapsed below 87,000. We're talking 86,521 right now, and it's down 1.52%. But that's not even the worst part. The crypto fear and greed index just hit 11. That's the lowest it can go. That's extreme fear. What caused this? It's two things coming at us at the same time. First, there's this wave of money leaving Bitcoin ETFs. These ETFs were supposed to bring regular people into crypto, right? Now it's like everyone's heading for the exits. Second, the Federal Reserve is just being careful right now. They're not making moves that would excite institutions and get them back into the market. Bitcoin's down about 7% for the whole year. Now I know that sounds terrible, and honestly it looks terrible right now. But here's something interesting. Every time the fear index gets this low, it's usually because we're near a bottom. Not always, but usually. The people who do this for a living, they actually get excited when things get this bad because historically it flips fast. But right now we're still in the selling phase, and that's what matters. Let me shift gears because oil just did something completely different. Crude jumped up to 56.04 and it went up 1.39%. The reason is Trump just ordered a blockade on Venezuelan oil tankers that are already sanctioned. So you cutting off oil supply that is basically already not supposed to be in the market anyway. But you need the context here. Oil was getting destroyed. It fell to levels we haven't seen since early 2021. Why? Two reasons. Everyone thought we were about to get flooded with oil because supplies were going to be everywhere. Plus, there was actual hope that Russia and Ukraine might make peace, which would eventually bring Russian oil flooding back into the global market. So that combo was crushing oil prices. Then Trump comes out with this blockade and boom, that changes things. Now there's friction in the supply chain, right? When people thought supplies were about to explode, it's a short-term shock. Whether it sticks around depends on what happens with Russia and Ukraine. If those peace talks actually go somewhere, oil could fall right back down just as fast as it went up. Gold is another story. It's sitting near 4,330 an ounce, and it's creeping toward record highs. Two things are pushing it up. First, this Venezuela situation creates uncertainty, and that's exactly what gold loves. People want safety. Second, the dollar is getting weaker, and that's actually huge for gold. The dollar index just dropped below 98. That's the lowest it's been since early October. Why did it fall? The employment numbers came in and they shocked people. November unemployment went up to 4.6%. That's the highest in 4 years. And the jobs report was even worse. Only 64,000 jobs were added. That's really weak. Now the market is thinking the Fed is going to cut rates more aggressively. When that happens, a weaker dollar follows. And when the dollar gets weak, gold gets strong because gold is priced in dollars. So gold gets hit from two angles. You've got people worried about the world, so they want safe assets. And you've got the dollar falling, which makes gold more attractive anyway. That's a powerful combination right there. Now let's talk stocks because we've got a really interesting contrast happening. Tesla just hit an all-time closing high above $486. It jumped over 3% in one day. Why? They confirmed they're testing driverless vehicles in Austin. People are betting big on the autonomous vehicle thing, and Tesla momentum is just unreal right now. Up almost 10% in 3 trading sessions. Up about 21% for the whole year. That's incredible. But then you've got MicroStrategy. This is a company that basically just buys Bitcoin and holds it. The stock fell below 190. It was over 400 earlier this year. That's a huge drop. Here's what's happening. The company's value compared to the actual Bitcoin it owns has gotten smaller. It was worth 1.4 times the Bitcoin holdings. Now it's only 1.2 times. The market is losing faith that this company does anything useful beyond just sitting on Bitcoin. It gets worse though. The rating agencies are saying MicroStrategy is basically financing all these Bitcoin purchases by issuing new shares. They're not making money from their business and using that to buy Bitcoin. They're diluting the people who already own stock and using that money to buy Bitcoin. That's not sustainable. That's the kind of thing that eventually catches up to you. And the market is pricing that in right now. So what do we take from all this? We're seeing huge market moves driven by geopolitical stuff, weak jobs numbers, and changing expectations for what the Fed will do. Bitcoin traders are panicking. Oil is volatile. Gold is shining. The dollar is weak. You've got innovative companies like Tesla doing amazing things. But you also have leverage plays on Bitcoin just getting crushed under their own weight. What this tells me is the market is repricing risk. For people investing, that means there are opportunities, but only if you actually understand what's driving these moves. You can't just react. You have to think. If this breakdown was helpful to you, please subscribe. Drop a comment and let me know which market move surprised you the most. And keep paying attention, because when markets move like this, the people who stay informed are the ones who win. Thanks for watching. I'll see you in the next one.